3, 2, 1, 0. All engine running.
Whether you've been married 1 or 20 plus years, at some point, you realized you were married into crazy.
And that's what our podcast is all about. We offer love, laughter, and a dose of reality as we unpack this crazy thing called marriage.
So sit back, relax, and get your ear hustle on. It's time to start the conversation.
All right, let's go. Welcome back to the Married into Crazy with Snooks and Lovey. This is Snooks.
I'm Lovey.
And we are here, episode 136.
Yes, ma'am.
All right, with our financial guru.
Mr. James Martin has joined us today. He is that gentleman that we've been talking about for the last couple of episodes. That is your financial freedom fighter.
Mm-hmm.
You met him earlier on a previous episode when we actually had him and his wife, his beautiful wife, Sandra, on.
In our during our Black Excellence in
Right.
Marriage.
It was a series
in
we
the month
did
of
in
February.
Yep, back in February during Black History Month.
Mm-hmm.
And one thing that we talked about, he had alluded to some things that we need to do, because here on this podcast, as you know, as we always talk about, is trying to really help you build up the sanctity of your marriage, to really lift that covenant. And we talk about communication, we talk about so many different things. But the thing we really never really get into is finances. You know, you need to protect it from a financial standpoint as well. So we thought that what we should do is to kick off our Him and Hers health series, that we're going to talk about financial health with Mr. James Martin.
So you can let him say hi.
Yeah. Say hi, James.
Good evening, everyone. Thank you very much for having me. Great to be here.
Oh my God.
I'm just asking. You're just going on, and he
I was trying
just
to do the
sitting
build
here
up. I was trying to do the
waiting
build
in
up.
He was trying to. Okay.
No doubt. No doubt. Hey man, so how are you doing, man?
I'm doing great. As I said, just excited to be back. Thank you all for having me back, and looking forward to sharing some great information.
Hey, we appreciate it. To make this relatable, I mean, I will say this, that a lot of people don't know this. We've touched upon it maybe 2 or 3 times in the last 2 years, or at least we've alluded to it. We haven't really gone in depth, but so everyone knows that we just celebrated 24 years of marriage a few months ago. And what people may not know is that about 15 years ago, we filed bankruptcy. It was 15, 16 years ago? 15. I want to say it was 15 years ago. And it was because of some of the bad habits.
2008.
Some of the traits, the things that we've dragged with us. We didn't have anybody around to teach us or share, I guess, how to be more responsible financially as a couple. Even individually, we took some of the bad traits from being single into, I shouldn't even say we. She took some bad traits from her being single. No, we took some stuff and brought it into our marriage, and then never really dealt with it. And it got to the point where we had to, well, of course, the market crashing and all that didn't help.
I was going to say, okay, so just to set it up a little bit better, what Levy said is true as far as like some of the spending habits. You know, I was a spender. Oh my goodness. I probably could have wrote a book about it, but it didn't help when the market crashed, you know, and I was doing real estate at the time. So a lot of people may think that, oh, we're good, even if you have spending habits and you're able to cover things, because at that time we were able to cover everything, all of our bills and whatnot. But a tragedy happened. I lost my job, my office closed, I should say. And this is some of the stuff that people are going through again right now with COVID. A lot of people haven't been working, or they're just getting back to work. And so they're like, so what are we supposed to do? Some people have tapped into their retirement and may have felt like they've lost a lot. So Mr. Martin is here to be able to shed some light on some stuff.
Absolutely. I mean, and we're looking forward to it, man. So we're going to give you the mic to let you kind of share some of the things that you think couples should do. And because I'm telling you, man, we took it in the shorts because I didn't know any better. I cashed out like my 401k, didn't know that there was a penalty. Like so many others, I didn't listen. I just said, okay, they said, you know, sign up for this. So I signed up for it. They said this money is available for you to take. So I took it. Didn't know that the IRS was going to come after me and do all these different things. So tell us what you're seeing right now with a lot of your clients and how we should, as couples, you know, prepare ourselves and do better.
Yes, sir. And again, What you just shared is unfortunately more the rule than the exception. In other words, there are several people that have been through the exact situation that you all just explained, and especially during what's happening recently with COVID. But even backing up prior to COVID, 2008, a lot of people took a hit, and even prior to that, Ernest and Ronald, when couples come together, the bottom line is, again, we bring all of our experiences together when we come together in that marriage. And obviously, again, thank God, my wife and I are going on 21 years. But what I've learned to answer your question specifically, bottom line is we're not educated in regards, and also give a plug, April is Financial Literacy Month. And most people have not had a very solid education from the basics of finance. And what do I mean by that? Think about it this way. When there are mainly two sources that we learn about finance from as we're growing up. Number one is from our parents, the household we were raised in. And that could be for better or for worse, depending upon how financially savvy our parents may or may not have been. And the number two is our peers. And then a distant third is if somebody went to school for a degree in finance, and of course they obviously spent more time and getting more educated, or if they went to some specific training, i.e. a certified financial planner or something like that, then they obviously got deeper into it. However, those are the two areas that most people learn from. So now you combine that with not having a very solid foundation, and then you get exactly what we have today. A lot of people that are very challenged financially. And then, as Ronna said, going through COVID, that exposed a lot of people. For example, one key area that I focus on, or one of the 6 key areas, is emergency fund. And people either didn't have one established, or if they did, hopefully they might have had to max it out, or as Ernest alluded to, had to tap into retirement to make ends meet through this crisis. So the crisis has really exposed a lot of things, especially financially, for people. I had several clients call me that I had been working with 2 years prior, and they were, hey, are you still in insurance? I need to get that taken care of, because they didn't know if they were going to get COVID. And obviously there was a lot of people that were very concerned. And I heard a very interesting quote over the last year: fear sharpens listening. And people were very fearful. So they were listening to things that they might not have been listening to, i.e. what was their situation in regards to their life insurance and even their retirement, and a lot of other key areas in their lives. But those key areas especially pertain to finance.
That's wild. And it's funny. You hear and that's one thing that people don't talk about. Couples might, pick up the phone like, girl, he just did. And, they'll talk about some really intimate details about what a spouse did or didn't do, and they share it with each other. But what people don't talk about are their finances.
Right. Absolutely. And one of the key things to that point, as I've shared with you guys before, and what you do, you think about the last time you heard a couple, and you've heard me say this before, there's not a fight about, honey, you deposited too much money into the checking account again, right, or honey, you put too much in the savings again. Just that doesn't happen. But a couple of things. Number one, the difference in mindset when it comes to finance. One of the couple of differences between the more affluent and the less affluent. And that is, number one, the more affluent earn interest, the less affluent pay interest. Big difference. Number two, the more affluent have a financial advisor, the less affluent do not. They work it out on their own. They kind of wing it. And then third and lastly, there's those conversations. Like I said, we don't necessarily have these conversations about finance, especially as a couple, but those are conversations that need to be held on at least a quarterly basis, if not more often, depending upon what the financial situation is. Obviously, for a couple that's more financially savvy, they might have a conversation more frequently because they're making more different changes with their money. But even somebody that, again, that's not, and another thing I want to make very clear before I make this next point, I help middle America. That's my target market. I want to bring Wall Street to Main Street, because the concepts that I'm dealing with are nothing new. It's just new to most people because they haven't been able to expose themselves to a situation where they get the education. So again, sitting down on a regular basis, checking out the budget and looking at the statements. Most people, when they receive their statements in the mail, all they do is pay it. And we're doing most things electronically these days. So there's just a electronic funds transfer or debit taking place, not even taking a look. I was just on a call earlier this evening with a colleague of mine. She had a client of hers that their term insurance had lapsed. And because they were making good money, he didn't even pay attention to it. So it had lapsed and then it automatically restarted. And it went from like $56 a month to $400 something a month. And he hadn't even taken a look. So it was just coming out for like 9 months.
Wow.
So taking a look at exactly what's actually coming out of my statements. Can we maybe save some money by changing cell phone carriers or a different home insurance provider or different auto insurance? Just occasional little checks like that and see where the money's going. You'd be surprised at how much money you could save.
That's great. Okay, look. So you've been married 21 years, us 24. So we're gonna say between the two of us, we our two couples, we got 45 years worth of experience.
Mm-hmm.
I know this, and I quoted it in a little commercial that we did because we really believe in what you do so much that you're the first person that we've brought on as a commercial.
I appreciate it
because it's just that important because we even highlight that there's several studies that are out there that talk about the main reasons why marriages fail.
Mm-hmm.
And and in no specific order, they talk about communication. We're dealing with 2 out of the 3.
Mm-hmm.
The third one was finances.
Mm-hmm.
And depending on which study you looked at, they were in different pecking orders. Some people had finances first, some people had it second, some people had it third. It just depended on where it fell and who did the study and how the questions were worded. But it's always there. So if you have a couple that's having difficulty just communicating, if you have a couple that's having a difficult time talking about, what they did this week at work or how they feel, how do we get people to talk about their finances?
That's a great question. One of the ways to do that is, again, by meeting with somebody like myself that can just kind of shine the light on these things. And like I said, the 6 key areas that I focus on. Number 1, I mentioned emergency fund. We look at cash flow. We look at debt management. We look at proper protection. We look at building wealth, and we look at wealth preservation. So that shines a light on the key areas, obviously starting with cash flow and debt management. Starting there and then building out into these other areas. But the 3 key areas are the emergency fund, debt management, and cash flow. And having that conversation, like I said, most people haven't even had it to begin with for a foundation. So it's key to get that out there. And as Ron alluded to, she was a spender. Most people are spenders. It's not just limited to the wife in the household. It could be the husband with his toys or whatever the case may be. So both sides can be equally guilty of the situation, but it's looking at it very closely and then putting a game plan together in terms of recouping or getting on track. So we have a solid focus and a solid target on where we're going.
So I have a question. A lot of times I'm assuming you may deal with people who feel like that's just not for me. So what is it that how do you reach someone who has that type of mindset or mentality of, well, that's just not for me, or I'll work it out myself. You know what I'm saying? How do you go about talking to someone like that?
Yeah, great question. And for somebody that feels that way, you hit it on the head. First of all, it's a mindset. So I want to sit down and help them understand having the proper mindset about understanding their mindset about finance, the fact that they think it's not for them, or, I let him handle it or I let her handle it. But sitting down and again, understanding, okay, well, I understand it's not for you, but you do spend money. You do have money coming in and you do have debt, or how much debt do you have, to find out exactly what their picture looks like. And then to walk them through steps, simply starting with the step number 1 is already understanding the mindset. And then number 2 will be, okay, well, I understand it's not for you, but let me just help me understand a little bit more. Let's look at your budget. Do you have a budget? Most people don't have a budget written down. And then when we get a budget written down, or we do they allow me to do a complimentary financial needs analysis. I provide that on a complimentary basis for all my clients. And then we look at where the money's going. And then there have been several couples where we finish the financial needs analysis and say there's X amount left over. And I say, okay, well, what are y'all doing with this money? You got this amount left over. What are you doing with it? And the first thing he said, we don't have that. We don't have that much left over. So I said, so what you're telling me then is, if I was coming into your house or going into your bank account and I was taking out X amount of dollars, you wouldn't be upset? Well, no, of course we'd be very upset, James. We'd probably call the police. Yeah, absolutely. So, well, how come you're not doing that to yourself? Why is it okay to steal from yourself?
Wow. Okay. All right. I got to ask.
My feelings.
No, I take notes from time to time.
Point.
And one thing I wrote down was, you had said, I wrote down two things. I wrote down financial needs analysis, and then underneath that, with underlines, I wrote complimentary. So when I hear complimentary, that sounds like free. So
yes, sir.
I want to know more about that.
Yes, sir. No, that's exactly what it is. We provide that free for all of our clients. That's actually our starting point, Ernest, because I'm excited. I've been in the financial services industry for going on 6 years now. Have also been involved in real estate finance, in commercial finance. So I have a pretty good grasp of that, and then not to mention the training that I've received. So to be able to offer somebody a complimentary financial needs analysis is key for a couple reasons. One, to help them, as we've already alluded to, help them understand exactly where they are, and then to help me to understand exactly what's going to be the best product for me to recommend for them. So in other words, if I just sat down and met with you and Ron and said, okay, I'm here to sell you some life insurance, but I don't know what your whole financial situation is, that would just be a very random thing, and it would be very limited. But there might be some other financial needs that you have that I can help you out with. Might be some challenges with helping out with debt elimination, or tax situation, or life insurance. But finding out, again, starting at that financial needs analysis, starting with the basics, and then finding out what's appropriate instead of just saying, oh, well, you need this, and going from there.
That's interesting. I've had conversations with a few people, and they're like, oh, it's funny. I'm not condemning anybody, because we were there as well. But I've heard people say, oh yeah, you know what? I did financial peace, because that's what Dave Ramsey.
Yep.
And, or I've done Susie Orman, I listen to Susie Orman, but these are the same folks. What is that? Oh, the rich don't listen.
I'm glad you mentioned them. And again, I'm with you. I'm not slamming them at all, but this was an article, Ernest, is so appropriate that you mentioned this. And this was not scripted. I just happened to have it right here on my desk. This article came out last month in Forbes magazine on March 20th. It said, the rich don't listen to Susie Orman and Dave Ramsey.
Oh, okay. That's true. I had no idea he was going to have that. You said that was Forbes magazine?
Yes, sir.
Oh, that's funny. Well, I'll tell you, the reason why I brought them up is because I've heard people mention them, but these are the same people that in the next breath are complaining about how, there's more month than there is money. And there's challenges. And I've gone through financial peace, read the book years and years and years ago.
Long time ago.
And we eliminated all of our debt, and then went right back into the same. We didn't change our mindset, because I like how you talked about mindset.
There you go.
Because I'm a disc consultant as well. So I've helped couples. We just finished working with a couple a little while ago with their disc assessment coming together. And one of the things that we talk about is, certain traits. And I have a high D or, trait, pilot by my own kind of like DNA. Anyway, so I'm very task oriented. So you give me a checklist, I'm like, boom, 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 boom. I'll knock it out and feel accomplished. But when we did financial peace, or read it years, when I say years ago, like when it first came out,
okay,
got it through Promise Keepers,
okay,
originally, and knocked out our debt, got rid of it. Then we turned right back around and created more debt, and got back, got even worse. It's almost like when you're losing weight. We lost the weight, but then the bounce back was, I ended up, usually weighing more than I did when I first lost the weight.
You found more than you lost.
Right. Same thing when it came to the debt. We got rid of the debt and then turned around and ended up acquiring more debt than we did before than the first time. And because we hadn't changed our mindset. Yes. And so I really like what you're talking about when it comes to helping couples change their mindset as it pertains to their finances. Because I do think that there's a correlation between, if you can get them to talk about finances, then that might open them up that much more to talk about other areas of their lives. So that way we can make sure that they're really, equally yoked,
Mhm.
and doing the things that they need to become those good stewards that God would have us be, not just with our time and our resources, but really with our money, with our
Mhm.
communication, with our love, with all these different things.
Yep.
So
And you take a look at, just to interject, you take a look at two things: an individual's calendar and their check register or bank statement, because most folks everything's electronic so much we don't really use check register. But you show me that, I can tell you all about that person. By the way, like you just mentioned, by the way they spend their time, what are their priorities throughout their day, and what they spend their money on. I can tell you all about them.
hey, it's in every crime show, every single crime show. Follow the
Yeah,
money.
and if they don't have either a calendar that they work out of, or some type of planner, or some type of financial tracking system, QuickBooks, like I said, a register, there you go. That says it all right there.
That's an indictment in itself.
Hmm.
Well, don't look at my calendar or my register.
No, we good. She's better now. She's reformed.
Look, that's only because Levy keeps the calendars in his sync with mine.
Hmm.
So
I'm
yeah.
the calendar at our house too, so I totally relate.
Well, let's keep diving into this, because I think this is good information that everybody needs to have. So you had talked about the 6 areas that you work on, but you mentioned 3 specifically that you talked about debt elimination as well, or debt
Hmm.
reduction.
Hmm.
How do you go about, is that still stem from the needs analysis?
Yes, absolutely. So we take a look at exactly what the debt is, and the total amount. And I ask them first of all, foremost, what's your plan to pay this off? We want to start there. And most people don't have one. They're paying the minimum,
Mhm.
and don't have a target date in terms of, well, yeah, by June of 2026, or we want to have all this paid off, or whatever the case may be. And here's our strategy to do that. They don't have that. We sit down, and I help them map that plan out. How can we attain this? What's affordable? And we'll use some of the concepts from Dave Ramsey, because some people are familiar with that, using the snowball effect and that type of thing, incorporating some of those principles. But the most important thing is having a plan, because again, until it's written down on paper, we can put stuff up here in our minds forever, and it doesn't really make as much of an impact until we have it written out. When I print out this financial needs analysis and review it with clients, a lot of people are very excited to see exactly where they are, and they say, "Wow, we haven't done this. We've done something similar to this, or it might have been years ago, or we've never done anything like this." And I've been excited recently, Ernest and Ron, about some of my millennial couples. They are off to a great start,
Really?
in terms of what their mindset and their plan and their focus. It's exciting. So that makes my job a lot easier. But it's the opportunity to serve, and first and foremost, educate. That's what I'm all about.
How do you well, I should say how do you, but well, I will say that. How do you help someone maybe overcome the fear of actually going through that plan? Because I know for myself, when we first talked about, well, the first time, but when you think about, okay, eliminating debt, even
Mhm.
though it's a good idea, it is kind of, it's almost seems kind of negative, because it makes you feel like, oh well, I can't do anything, there's all these restrictions,
Mhm.
and I'm working, that was my mindset. I'm working all the time. If I want to get my hair done, I'm about to go get my hair done, or
Right.
something
Right.
like that. So
Yeah.
but a lot of it, I think, was built out of fear too, because I felt like that means I'm not gonna have any money. I'm only gonna
Right.
have $20, or something like that. Do you have a formula or something like that, or does it just depend on the couple?
It more depends on the couple. It's on a case by case basis, Rona. And the most important part about that is, again, just sitting down and talking, and me asking some questions, finding out again what's the mindset. Hey, yeah, I'm fearful about it. Uh, this is what's happened in the past. Might have been a bad experience from a past relationship, or again, based on how they were raised. We never had money. We didn't have much, so I'm spending what I have while I'm here. I mean, all those things it's a matter of just, again, me sitting down and asking some questions, developing an understanding of where they are in regards to their previous financial experience, and most importantly, why they think that way.
The why. It always comes back to the why, doesn't it?
Yes.
So, okay, so I'm going to talk. Let me know, steer me back on path if I go too far off.
I'll pinch you.
Okay, yeah, she will pinch me. But one of my biggest pet peeves, I'm just going to be very blunt. We have a wide listenership, and we have a lot of individuals from a lot of different cultures, but we do have a very predominant listening ship of people that are African American descent. And I'm just livid every time I see a GoFundMe or a car wash because something transpired, particularly not during COVID. People passed away, didn't have the money to, have set aside to pay for a funeral. So we're going to do a GoFundMe, or, what have you. I mean, it could be a variety of different things. It bothers me because it's affordable. Life insurance is affordable. I know there's some new stuff that came out where there's planning. I won't call it estate planning, but there's different things that people can do. And I want you to talk to the audience about what we can do. It's so funny. I had a conversation with somebody the other day where we were talking about life insurance, and I said that, and I told them about how we plan on having you on and some other health professionals as well. And I told them that I think it's important because you want to live, what good is it going to be healthy if you can't afford, to do the things you need to do in life? And what if God forbid, but what if you're struck down? You're building this wonderful relationship, and then you just left your spouse high and dry. And they said, oh, so you're not really talking about life insurance. You're talking about love insurance. You're trying to protect the love of your life. And I was like, I like that. I like that phrase, love insurance.
Yep.
So can you talk about how to avoid what you recommend for couples to do so they can avoid having to do GoFundMes and car washes and bake sales and all that to bury their loved ones?
It's all about education, Ernest. And unfortunately, not just in the African American community, but in a lot of communities, people have been done wrong and misled in regards to a policy where an unscrupulous agent was just trying to make a quick commission. And that's another thing I address at some point during our conversation when I'm meeting with a couple. Hey, I'm here for the lifetime. I'm not just here to try to make a commission from you. I want to be here for you, for your friends, for your children. So I'm not just about that buck. It's so much more important to me that we have things in place properly. So, for example, when one of the loved ones does pass away, you don't have to have the GoFundMe or whatever the case may be. And I almost fell out of my chair when you said that, because you can imagine how often I have to deal with sitting down and talking with people. And fortunately, I haven't had to deliver any death benefit checks yet. But I know sooner or later it's going to happen. It's inevitable. But again, helping people understand the value and the significance of life insurance, because when most people think of life insurance, they don't think of love insurance. They think of people dying, and they think they're invincible, and they'll think I'll get it later, and later never comes. They treat planning financially like a seatbelt. They don't want to put it on until it's too late. And so I really have a strong emphasis on taking my time and, again, educating people on the difference. Say, for example, starting out with what I call insurance basics, the difference between a term policy and a whole policy, and why this one might be better based on you're reviewing your financial needs analysis. Now I can give you some guidance. And then why a debt elimination or debt consolidation strategy would be better. And I have a referral partner that I work with that. So educating people on, again, the significance and the value. I had a client I just ran into yesterday. Perfect example. He had, fortunately, we got his policy in place, but I hadn't talked to him for a few months. And he shared with me he had an accident recently where he passed out at the wheel. And thank God he's still alive. But and then they did a battery of tests and found some health challenges that have come to the forefront. So if he didn't get that policy, he might not qualify for that policy today. So that's another reason why I have an extreme sense of urgency Well, and again, people think I'm just pushing for that commission. No, it's their life that's at stake. It's the life of their loved ones, the livelihood of their loved ones, if things are put in place properly. And so now, if I haven't been out, I was to pass away, thank God, my family's good because of I put into place the things that I teach. But again, answer your question, it's about educating people and hopefully, prayerfully earning their trust that, again, no, James is not just here about the commission. He really cares about the family. And I want to make sure that things are in place so they don't have to do those things that you alluded to, the GoFundMe's. For another quick example, you and I talked about this not too long ago, final expense insurance. A lot of people aren't familiar with final expense. What is final expense? It's exactly what it says. It's for your final expense. When somebody perishes, you have a final expense policy that's very inexpensive that can go up to, depending upon the carrier, that's used up to like $50,000, and it's very inexpensive to pay on a monthly basis. But when that loved one passes away, boom, even if they have a regular life insurance policy, some people don't realize it might take 3 to 6 weeks for that policy to be paid out, the death benefit. But with a properly put together financial expense policy, that could be taken care of in 24 to 48 hours. They could have the funds to put that loved one to rest.
So a final expense, that's different from a regular life insurance policy.
Correct.
Okay. So it's funny that you bring this up because I kind of wanted to ask a question about this too. A lot of people, like when Levy, you were talking about the GoFundMe's and the car washes and
Mm-hmm.
certain things like that. They're not actually even trying to raise like $50,000. Typically, you're looking at maybe 10,000 to maybe $20,000 um
A service,
for a
cremation
service,
and a service.
cremation, all
Mm-hmm.
that kind of thing. So
Mm-hmm.
I think in some folks' minds, when you talk about the amount of life insurance, they're always thinking it has to be 50,000 and above.
Mm-hmm.
And so maybe I can't afford that. But what is, I mean, can they start with a certain amount that they deem necessary? I mean, you never know what it's going to be, but
Mm-hmm.
something as small as $20,000 or $15,000 or something like that.
Absolutely, Rana. And that, again, I hate to sound like a broken record, but that's why the financial needs analysis is so important. So somebody calls and says, I'd like to talk to you. I heard you sell insurance. I said, yeah. And I said, well, and I offer the financial needs analysis. Oh, no, I don't need that. I just need, like I said, I just want to get 20,000 in term insurance and I'm good. I'm very reluctant to work with somebody like that because I'm not being a benefit to them. In other words, they're not getting the using my training, using me as a resource that I am to the max. And I might reluctantly do it after some conversation, but again, it depends on where their mindset is, so I can best help them. Because if I write them a $20,000 term policy, for example, and they have $160,000 that needs to be taken care of in the event that they pass away, what good is that $20,000 term policy?
Mm-hmm.
That's true. You said something that rang true. Kind of tugged on my heartstring a little bit. Um, so some people that have listened from the beginning, they know that I've had some health challenges over the course of the last year and a half or so.
Mm-hmm.
And I'm proud to say that I was able, with your assistance, able to get back before we knew all this was going on. I was able to get an IUL in place. So I got an indexed life insurance that was put in place, and then after that, I ended up getting diagnosed with bladder cancer. And we thought that we cut it out, cut the tumors out. We just found out recently, actually just on Thursday, that got another tumor. So now I got to go through an elevated amount of therapy that's going to be coming up.
Mm-hmm.
But chances are that if this had happened, let's say now, I'm like, okay, you know what? Had a second bout with some tumors. Maybe I need to go get some more life insurance. There's a chance I could be turned away. I wouldn't have been able to get the policy, but now that we had it prior to, it makes a huge difference. Now we're blessed, extremely blessed, because it's such at a very low stage to where it's manageable. We can work with it. But what if it was diagnosed later and there was something, and I kept putting off, and so I think it's very important for people to realize that there's some things that we can put off, and there's some other things that we can't. And this is, they always say, it's funny. I have so many people that say, control the controllables.
Yep.
We can't control when we're going to die. We don't know when we're going to pass.
Right.
But we can control we can put some processes, something in place, right? Some procedures in place to assist when that comes. Because I know there's two things are guaranteed. Snooks is always going to make fun of me, and at some point I'm going to die.
Yeah, exactly.
Ever.
That's just the nature of things.
Mhm.
And so why not try and mitigate the cost that if I truly love her, I don't want to burden her with an additional expense while
Right.
she's grieving. She better grieve while she's grieving.
I don't know what you're talking about.
My loss.
I'm getting the pool
She'll be
boy.
at the casino.
Hey, no.
Which would be a feat upon itself, since how we don't have a pool.
I was looking. No.
So anyway, but it's one of those things I think is extremely important, and I truly thank you for coming on, because a lot of people just don't know.
Yeah.
You only know what you know.
Well, and exactly. And first and foremost, I'm gonna be praying that everything is well on the situation with that you just shared. First and foremost, and secondly, all your listeners, the majority of them have a guy. I go to my guy or my girl that does my insurance or that does my finances. Please get back with them, especially if you haven't met with them in a while. Do your review. If they're not reaching out, because I reach out to my clients on at least an annual basis, just touch base, see if anything's changed. Do we need it? And again, are you just trying to make more money? No, I'm a resource. The money's going to take care of itself. And matter of fact, I was talking with a client last week. We did her FNA, her financial needs analysis, followed up with her. She was so grateful. She's like, "Oh, James, what do I got to pay you something?" I said, "No, I don't charge. This is what I do." I said, and the way I'm compensated is from the carriers anyway. So it's not something that I charge my clients. How I get paid is by somebody appreciating me so much that I brought enough value that they refer business to me, that they refer other clients, friends, relatives. That's how I get paid. And then also, and again, get with your guy, your girl, your financial person, and ask questions and get educated and find out how to make sure you have those key areas. Just to review again, have the cash flow taken care of, have the debt management taken care of, have the emergency fund in place, have proper protection, be building wealth, and be preserving wealth, and make sure that all those are in place. And at least that first three that Ernest alluded to as well, that the cash flow, the debt management, and the emergency fund. At least make sure those are very, very solid, and that'll be a blessing and a great foundation.
So if they're going to go to their guy, their girl, or if somebody was going to pick up the phone, call you, or reach out to you an email, what are the top 3 questions you would recommend that we ask? Like what like if I'm going to pick up the phone, call you, what would impress you? Like, okay, yeah, this person's really trying to seek some information. What are the top 3 things that you would recommend that people reach out and ask about?
Number one, I want them to know exactly, and then they may or not, may not discuss this right off the bat in terms of details, but number one, what's your debt situation like? How is your debt? Are you overextended, as you mentioned earlier in the conversation, or do you have more month than money? And that would be one. Another one would be, are you properly insured? A rule of thumb for life insurance is actually 10 times your annual gross income. So are you properly insured? And then third would be, do you have a solid retirement strategy in place, a retirement plan in place? Because again, most people will say, "Oh yeah, I get this or I get that, or my guy." Okay, that's great. But then as we get more into the conversation, at least tell me a little bit of some general details about your plans. Because again, you might not give me specifics, and that's fine. And we can get to that later on. But at least I want to make sure that somebody has a knowledge of those 3 key areas in where they are financially. Because if you don't know those, it's a pretty sure sign we definitely need to talk, or you need to get back with your guy, your girl, and get some things laid out so it's very, very clear.
Hey, why 10 times your annual salary?
That's always been the rule of thumb number. But the reason why, when you think about it, you think about your income, you want to have enough and life insurance, I should say, you want to have enough to pay off debt, and then also enough to sustain your income for at least a few years, at least 5 years before, uh, prayerfully, the surviving spouse wouldn't have to move, because there'd be enough to cover that. And then, either, depending upon the age, if there's children that still need to go to school, so that be enough to cover those key areas right off the bat.
That's good.
So I wanted to kind of I know when we're talking about life insurance, typically you're talking about this, the spouses. What about the children? Because of COVID, because of, violence or what have you,
Mhm.
where parents are burying their kids. And
Mhm.
some of these car washes and fish fries, they're not necessarily for the spouses. They
Yes.
might be for children also. So what would be your suggestion? Do you suggest that there's a policy or something that's put in place for children?
Yeah, I'm so glad you mentioned that, Ronald, because I definitely do. Life insurance is one of the best investments that's out there, that a lot of people don't see it as an investment. Again, like I said, when they hear the term life insurance, they think about dying. They don't think about living or life, insuring a life. So not only do I recommend it for the parents, I definitely recommend it for the children. A child with most carriers can get a policy, can be started as early as 2 weeks old. So you think about 2 week old child, and you're putting in $25 a month, for example. And now by the time that child, depending upon what type of policy you have, I would recommend some type of a whole life or permanent policy that develops a cash, what's called a cash value, that you can actually access and withdraw from or borrow against. Withdrawing is going to provide a tax implication. Borrowing against, there's no tax implication on that. And get into more details. Call your guy, call your girl, or call me. We can talk more about that. But yeah, no, definitely getting life insurance on child/children as soon as possible. I mean, again, depending upon the type of product that you use, that could even pay for college.
Hmm.
Amen. Okay, so if our listeners don't have a guy or have a girl or somebody that they can actually reach out to, how do they get in touch with you?
They can go to my website, yourfinancialfreedomfighter.com, and fill out the form, and I'd be happy to get in contact with you, set up an appointment, or you can call me directly at 909-648-0944. Once again, 909-648-0944. They can call me or text me at that number, and I'd be happy to, like I said, answer any questions, set up an appointment, and walk folks through the process. I'm passionate about educating people and having them to be informed so they can make the proper decision when it comes to securing their financial future.
Now, does it matter if they don't live in California?
Nope, does not. Nationwide.
Nice, nice. So again, hey, everyone, I implore each and every one of you, because I'm gonna put them on the spot right now. Um, Anybody calls and they mention Married into Crazy, well, it sounds like you give the financial need analysis. That's something that you believe in. So you provide that for all your clients,
On a
complimentary.
complimentary basis. Yes, sir.
Okay, we're back to complimentary, which I like. I like that word. Then I think it's a necessity for all of you to reach out to him to at least get your financial needs analysis to see where you stand, and see if there's a need. Because yeah, you might be sitting golden, but then what if you aren't?
Yeah.
There's an opportunity to really take care of not just your spouse, but also your children. There's a legacy opportunity here to develop something. And you've got a gentleman that's willing to work with you. And more than that, I want to keep you away from some of the statistics that could harm your marriage. There's a
Right.
lot of things. You know what? Fight over the World Series, argue over, Super Bowl, but
Right.
let's not have disagreements or a conflict over our finances.
Well, and
Absolutely.
also too, kind of like you're just talking about the love insurance, the last thing that you want to worry about is when your spouse is gone, how are you going to get through, or what are you supposed to do? I remember when my dad died, it was 3 years ago last month, and I just remember my mom, and they had everything already, you know they had everything planned. They had life insurance, and they had um things in order. And I also know other people who've lost their partner, and they didn't. And there was such a big difference from, my mom was able to grieve and just worry about, okay, do this, as opposed to um not only grieving, but oh my God, what am I gonna do? How can I? The best gift that not the best, but one of the best gifts that you can give your spouse is to make sure that your spouse is taken care of if something was to happen to you. I'm thankful that we're set as far as our life insurance and things, because that's one less thing that I want Lovey to have to worry about, and vice versa.
Right.
So
Yep.
find out what you don't know, or confirm what you do know, but at least make a call and or send an email or text or something.
Mhm.
Amen. Well, again, we want to thank you for your time. And you're familiar with this because we've had you on during Black History Month for our series in Black Excellence in Marriage. So we're going to do the I can
Yeah, there's only
for
two
couples.
left.
Oh, there's only 2 left. She's going to try and see she reaches in first. Ladies first.
That's right.
And so this is the part where we take the affirmation for the week, and I'll pull one. And this is something that we should all focus on, one of the spouses. And then,
You ready?
yeah, go.
Okay, mine says, I can run the errands.
Okay, I didn't plan this. Look, there really is. Okay, if you're here on, there really is nothing else left because we pull all of them. Mine says I can be more fiscally responsible.
Oh, wow. Look at that. Look
Right?
at that.
Perfect timing.
That's so funny.
Mm,
Hey,
Lord ordained.
right? James, thank you so much. Again, that's yourfinancialfreedomfighter.com.
And why don't you give us your phone number one more time?
That phone number again is 909-648-0944. 909-648-0944. And Ernest and Rhonda, thank you all from the bottom of my heart for having me on. It's truly been a pleasure. And I love you all to death and look forward to helping as many people as possible and just continuing to serve.
Amen. Hey, it doesn't get any better than this. So this is how we're kicking off the Him and Hers health series. And what, like you said, what better timing than in April, which is Financial Literacy Month.
All right.
Amen.
All right. Well, hey, enjoy the rest of your week. And for the rest of you, until the next time, be blessed.
Bye-bye.